Thank you very much for joining us on NDTV Profit. A very good afternoon to you. This is Manvi here in the Delhi studio. Great to have you on the channel today.
Thank you very much.
You know, we're nearing the end of the fiscal year, and this is when we start talking A, about the budget, and B, about, various government targets. And I'm going to stick to one in particular, and that is the government's revised divestment target. It's quite clear the government won't be able to meet it. You understand the nuances of operating in this space very well. What, to your mind, are the main reasons for the failure to meet the target?
So, there are 2 or 3 things we must keep in mind. The last year has been a challenging market for new issuances or issuances for divestments. So there have been windows of good time, but the market has also had its share of sort of difficult times. If you look at it more recently, particularly in the last 2 months, it is also imbibed with a lot of volatility. Thirdly, I would say that the government did have its share of divestments, which it did in Coal India, SAIL, Engineers India. So it did get those windows, it did use them. Therefore, the combination of volatility and sometimes hostile markets is the challenge. Secondly, if you look at a reasonable basket of the government disinvestments, a lot of them are in metals and energy, particularly oil. And these have also got sectoral headwinds that are hitting them. I must tell you from experience that if you just look at, the government has become pretty good and astute at how it conducts its disinvestment program. So it's understood it. It has now started, planning. It is adopting it like a program. And therefore, from that perspective, they're careful about how they go about it. A few suggestions that we have, and I think the government is already sort of looking at some of this. Use this kind of time period to continue engagement through roadshows and other means with investors. Understand priority and likes of investors so that you keep the program, you keep the companies in readiness. We also read and hear that the government is looking at appointing technocrats who will also be involved with the operations of some of the PSUs, which I think is a good step. And last but sort of not the least is really looking at how to prioritize the disinvestment companies and add to some more companies in the basket. Like, can we get some new IPO companies from the government sector? And secondly, can we diversify from the current Coal India, ONGC, and NTPC to a few broader names? So since this is likely to be an annuity exercise, some of these measures, which I believe the government understands and is sort of doing it well, will sort of help the government disinvestment program on a sustained basis.
A very comprehensive assessment there, but I'm just going to pick 1 or 2 things that you mentioned. The volatility and the relatively narrow or small windows is a theme that's going to persist in this year as well, in the next fiscal, I mean. The fact that, metals, the sector has headwinds, the government has a large portfolio. One way out is to perhaps look at a new sample of companies as you've recommended. But net is, 16, 17 likely to be a similar year, action replay of 15, 16 on the divestment front?
See, it'll be difficult to talk about what can happen to divestments without sort of having a view on the markets. So maybe I'll just take 1 minute to digress to markets. See, the reality is there is volatility. There are a number of external shocks that we are dealing with. There are some internal headwinds. So our judgment is that for the next few months, markets can have volatility, but it should offer its bouts of windows where, programs can be done. Having said that, it all depends on the size of the disinvestment issuance that is happening. If it's a very large issuance, you have to be careful that you don't get sort of caught in turbulence on the day that you do something. But if it's a more modest issuance, some of these windows, if you are well prepared, can happen. Secondly, I've always said it on your programs as well as in other shows earlier. The good news about the government companies is they are large monopoly or oligopoly players. They are profitable, they have track record. So they're quality companies. So therefore, there is that positivity that is available. So I remain optimistic. I remain modestly optimistic that the divestment program will happen. But we have to keep in mind that this year, the revival of the markets may be a little more towards the end of the second quarter fiscal than earlier. So that's how the divestment program is likely to sort of happen.
I'm going to probe a little further. You gave examples of companies beyond which we should look. You said go beyond the Coal Indias and the NTPCs. Would you share some examples of which companies you're referring to in the PSU pack?
So these are my own views, but for example, we keep hearing about Hindustan Aeronautics. We keep hearing about other companies which are not yet listed, like we have heard about Cochin Shipyards. So over time, the idea is to make this list a little longer and go beyond the traditional 3-4 names that you need to come to the market. There is one other factor that I must also mention, and I think the government is sort of doing this pretty well. So, when you do a divestment issue and when you want to come back to the market, you also want the investors to sort of be with you, make some money off you. So it's a careful balance between getting the pricing right for the government as also allowing the investors to make that little return so that they are enticed to come back. So I believe that IPOs are one way of doing this because in IPOs, naturally in the past, a lot of investors have made money. And I think Coal India was the last IPO we had in 2010 of a meaningful size. So if some of these larger issuances can come, I think it'll be a good idea from a disinvestment program to keep adding more companies to the basket.
Okay, I'm just going to extend our conversation now to what the M&A trends are, and would it be fair to use the word subdued to describe how 2015 went down?
So let me just give you some statistics from whatever assessment we have done at our firm. Calendar 2015, the total M&A advisory value was close to about $47 billion. This includes private equity investments as well. So that, in our judgment, is between 16 and 17 billion. So we actually estimate core M&A to be around 30 billion that happened in calendar 15. And therefore, it is a little down compared to what happened in calendar 14. If you sort of decipher that or peel that a little further, the domestic M&A has really taken a hit. But if you look at inbound and outbound, they have been stable. Inbound M&A has in fact increased. But the real winner here is private equity investments. If you take the last 4 or 5 years, they have just been increasing year after year. And by any number or any stretch of calculating, 16, 17 billion is a meaningful size. And if I may just sort of extend this for a minute more, I think one thing that India is now fortunate to have is this kind of private capital at its helm. Because if you see the trend in the last 3-4 years, my belief is that equity capital markets have become a little seasonal. 3 or 4 months in the year, because of volatility and other hostile reasons, the markets are not conducive to necessarily continued issuance launch. So this private capital, which comes for both growth and inorganic backing, is become real. And really, this is the trend that I continue seeing in 2016 and maybe even in 2017. This is serious money. And this money can come in various forms. It can come in growth financing. It can come in buying other private equity investors who want to exit. As also, it can come out to do management buyouts where you have professional managers holding a small stake and private equity funders behind them holding a substantial stake. Some of this is prevalent in other parts of the globe. I think we slowly start seeing this coming in a much bigger way into India over the next 2 years.
And you said that is a heartening trend, but I'm just
maybe
yes. I just wanted to get a sense from you on whether this private equity money, and based on the analysis that you've done, it has a certain natural sectoral affinity. I mean, is it sort of clustering into a bunch of spaces? Obviously, the e-commerce arena is one such. I'm just trying to understand the dispersion and spread based on your analysis of the private equity funds that are flowing in greater volumes.
So let me answer that. Let me take that question in 2 parts. So whatever analysis we did on the M&A trends for calendar 15, on the inbound outbound, that is the inbound outbound M&A, we saw 3-4 clusters. Actually, just to sort of step back, while the M&A value decreased, the number of deals increased in 2015. So this is one trend I want to point out. Second, I want to point out is that on the M&A deals that happened, they were substantially clustered around 4-5 sectors, particularly on the inbound and outbound M&A. They were around energy, they were around IT and IT enabled, they were around pharmaceuticals. This sort of had, and inbound also had its share of FIG deals. The domestic deals, domestic M&A that happened in the country was more around industrials, auto, and around those sectors. On the private equity, we see a difference. If it is growth financing, the consumer sector, the FIG sector, really see a lot of deals happening there. But we also see private equity investors participating a lot even in M&A deals. And there it's more around IT, ITES, pharma, and these likes. So this is so therefore I see it as a more broader nature than just restricted to 1 or 2 sectors.
Okay. And, I'm sure that's a healthy trend, the fact that it's, across sectors. I'm going to ask you to answer this, without getting into any tricky territory, but the M&A pipeline for 2016 that you're seeing at Kotak, I mean, what is it indicating? What cues is it sending out? I'm not asking for specific deal details, just a sense of how this year could pan out.
So we are seeing a good pipeline at Kotak Investment Banking. At this moment, our pipeline is more centering around the industrials, automobiles, around healthcare and pharma. And we are also putting special focus on the internet sector. So there, obviously, there is private capital coming in, but we are also seeing small trends of M&A in the internet sector that have just started to mushroom. So it's a little bit centered around 3-4 of these sectors that we are seeing action here, and we are quite happy that this pipeline looks encouraging.
Okay. One final thought from you on the corporate earnings piece of the puzzle. And, in a sense, the health and profitability of India Inc. has a correlation to the M&A levels that we see in the country domestically. Just your thoughts on the quarters that we've seen so far, what the outlook is. Again, you have a point of view that, is an interesting one. So I wanted your thoughts on that as we wrap up the conversation.
So we have been seeing downgrades for some time now. Our belief is that maybe with one more quarter out, we are probably coming to a reasonable end of the downgrade cycle. In the middle of all this, we did see, for example, the consumer sector, the cement sector, partially the auto sector, some of them stand up. Market is very focused on what is happening to the banking sector results. As you know, that's been making the news for some time. We think that headwind may continue for some more time because the problem at hand is pretty large. So our belief is that we are probably coming to the fag end of this. So I'll just give you a little reverse calculation. We think that the earnings of the Nifty company should be closer to about 475, 480, and at a multiple of close to about 14 and a half times for the Nifty. We think that comes to the index at about 6,800, 6,900. So that's where broadly the Nifty is today. It's not a big number down from there. Having said that, this is not going to be a smooth affair where we're just going to see growth coming in. It's going to be a little time before the revival sort of sets in. We think 2-3 things are needed for this revival. This revival may be more led by government spending and the benefits of the government spending coming to the affiliated sectors. There has been announcement about more money in the hands of pensioners and OROP. We think that will put some purchasing power. And just a personal judgment of wish that if the monsoons are good, I also think the dark horse could be the rural economy. So this is the way we see the trend. So it's going to be a slow build-up. It's not going to be a quick and accelerated one.
Well, it's been an absolute pleasure, S Ramesh, to get your assessment of a whole bunch of key trends, particularly divestment and mergers and acquisitions right here in India, inbound, outbound too. That's S Ramesh, Managing Director and CEO of Kotak Investment Banking. Great to have you on NDTV Profit this afternoon. Thanks very much for your time.